right. Well, I'm pleased to be joined by Brian Roers Companies. Kent will be joining us later, hopefully shortly, I believe, and we're going to have a good conversation here about multifamily development and some of that. Well, here's Kent right now. Good
Hey,
to.
Brian, how are you?
I'm good. How are you?
Good.
All right. Well, just happy to have both of you here to talk a little bit about some of the projects you've been working on and some multifamily development talk in general. And I understand you're up for an award, which is kind of cool. So
Yeah.
let's chat about that. But first of all, I was wondering either one of you can take this, but who wants to? I'm curious to know a little bit more about the history of Roers companies and how long you've been around and how you both got started in the residential development business.
You want me to start it?
Go ahead.
Brian's good at picking up behind me for the things that I lack, you know?
Mhm.
So anyway, Brian was an accountant after college and got a CPA with KPMG. I got my certified financial planning degree, so my CFP while I was wholesaling. So I was selling products like mutual funds, annuities, life insurance, all of that to financial advisors who would then sell it to their clients. And on the side, Brian and I were doing real estate. So we had 20 houses around the University of Minnesota. We got up to about 20 houses that we did lease to owns. We'd run ads in the Star Tribune back when people would read those papers, right? And we were looking for apartments and a way to get into real estate. And we would call everybody we knew, and nobody was like offering it to other people. Brian and I would meet with people and they had their couple of units, but they didn't know of anybody and they didn't want investors and all that. We got involved with some mentors of ours that were doing some hotels. But as people would say, hey, Kent and Brian, what are you guys doing with your money? Especially on my side, just because that's what I was talking about every single day. And people would say, what are you doing with your money? And I would tell them, and they would all say the same thing. And that was, the next time you do that or have an opportunity, let me know. I'd love to invest some money into real estate. And so after you hear that 300 times, Brian and I said, maybe there's something here. And so 2 weeks before Christmas, 2011, my company shut down. 950 of us got laid off one day. My company exited the US market and went back to Canada, where they were based out of. And I just looked at Brian and said, hey, why don't we get this started? Why don't I jump out tomorrow? And I drove to Western North Dakota and we looked at some job opportunities out there and had the same problem everybody did, and that was housing. And so Brian and I just looked at each other and we said, why don't we just do what we've always done, just on a larger scale? And let's go out to all these people who have told us they want to invest with us and they want to get into real estate, and let's do that. So that's how we started and really got Roers companies going.
And what was your first project? Was that in North Dakota? Or
It was Stanley, North Dakota.
Yeah,
wow.
so we got our start really in oil field housing and housing workers out there, which was great. I mean, it just really created the basis for us in housing. And we still own that portfolio today. It's more of what we call our legacy portfolio, but we've been to a lot of markets since then. And so, it's been Dakota's obviously very Midwest based. So Minnesota, Iowa, Wisconsin. And then it was right around 5 years ago, we branched out and went south and southwest. And so we are now in Arizona, Utah, Florida, Texas, the Carolinas, and Tennessee. And so really pushed hard in that time frame, really trying to figure out the trends of where people were moving. And that's what you'll hear a lot from us, Brian, is, even to the stresses of it, we're always following the demand of housing. That's just what we do. And so we're very focused on that. So like Art tomorrow, I mean, everybody asks, you're going to ask us 10 questions about interest rates and banks and investors and all that. And the real truth to it is, as long as the demand is there, which it is, we'll keep pushing hard. We'll keep putting up buildings. We'll keep pushing forward. And so that's the real basis for the business, is just watching for the demand in housing, which, Kent referenced the start of Roers companies. We've been doing real estate. We've been doing housing back to early 2000. I joke that I graduated St. John's and moved in with, drove down to the cities and moved in with Kent. And I don't think the tires of my car were cold before he was pitching me to go buy some housing up in Blaine. And so that's what we did. We started buying housing in 2001.
And how many housing units have you developed now?
Yeah, so we're north of 12,000 today. And so I'm gonna put the exact number.
Yeah,
but
I think we're at
2 we're just shy of 3 billion in real estate that we've done. And so
when he says that, we're at like 2.9 billion in real estate that we've done in 13 years. We've done about 13, I thought it was 13,000 units was what we have.
yeah,
Yeah.
wanting to-
Yeah.
13,000 units. And we've raised about 550 million from just our individual investors. So to give you an idea, you know, when you go from doing single family homes to building a 40-unit apartment, which was our first apartment in Western North Dakota, you need equity, and you need about $1.5 million to be exact. And to Brian and I, 6 months to raise that up, right? So we finally started putting entrepreneurs, just anybody and everybody we'd run into on King airplanes. We'd fly 4 of them out there at a time. We just put it on our credit cards, right? And we'd put them on a tour bus and we'd drive them around the Bakken, you know, for the day. So they'd fly in early in the morning. We'd put them on a bus. We'd show them the apartments that we had built, the ones that we had under construction, the ones we were planning, and they would write out and agree to invest with us. So everybody saw what we were doing out there. And again, that's what really propelled us and got us going.
You've alluded to the demand, and it seems like that's what I'm hearing all the time. There is a demand for housing. We do need more housing out there. It seems like, of course, the trick is the financing part and pulling everything together in the capital stack. Tell us about that and what how you're approaching that challenge.
Yeah, so one of the things, so right now what we're showing, the numbers are the US is 3.8 million homes short. So we're short on supply. If you pull the charts and the numbers, the number of housing units that were built between 2010 and 2020 is still way down. So what happened is during the Great Recession, we got way behind and we just haven't caught up. The projection is by the year 2030, we'll be 6 million homes short. So almost a double on what we are today. And then you throw on top of that where you went, Brian, which is it's harder today to develop than ever before. And so banks, you know, don't have the capital they used to have. So they're not lending money. There's just less funds out there to lend. And then the secondary problem, which everybody, this is the one that everybody talks about, is the interest rates. And so rates are up, and the demand and the supply of capital is limited. And to be honest, the second problem is the bigger one. We can afford the interest rates. We can figure that out because when you're staring at a monsoon of need down the pipe, we know it'll be there. We can afford the interest rates. The biggest struggle has been getting people. So I mean, it's, you know, we worked harder the last 2 years, I think, than we've ever worked. Pushed our teams, had to come up with more creative solutions, finding ways to close projects. Every way we can get our hands on debt has been really challenging. You know, the positive of that is the equity has been there. Our friends and family, which we're very loyal to, can't reference that we started day one with them. We are one of the few firms in the country that works the way we do with friends and family equity. And we raise it 100,000 to $1 million at a time. And we're willing, you know, we love that group of people. Others don't. Others flock to institutions. You know, back in the heydays, we've always stayed true to our friends and family, and we always will.
But what do you see as the outlook for multifamily going forward this year? Do you see things continuing to, I mean, when you look at the permits and planned units, it's certainly down from last year, certainly by the numbers we're looking at. What do you see going forward?
Yeah, it's no shock that the numbers are down, because if you saw the stress and the amount of work Brian and I have had to go through and the rest of the firm to make these projects happen, it's unbelievable. So it's not a surprise that those numbers are down. And it just seems like so much is against that area or that segment. And that's why Brian and I are, you know, sitting back and scratching our heads a lot of times, because we're probably more bullish than we've ever been, because it's super hard to get the projects to work, right? Where compare that to 3 years ago, anybody and everybody could get money. It was cheap debt, you know, construction was plentiful, you know, it was just easy. And now it's really, really hard, but the need is still there. I mean, people ask me, when are you going to stop building apartments, Ken? And I just say, you know, as soon as they stop filling up. I mean, they fill up. Every one of these apartments that we're opening is 60% leased when we turn the doors open. I mean, it takes us 5-6 months and the apartment's plumb full, right? So it's like, that's when we'll stop, is when they stop filling up. You know, and you take a look at all the drivers behind that, from, you know, baby boomers looking to have less work around their houses, to the young people wanting to get out on their own, to just the fact that people don't want to lock themselves into a long-term commitment. But then you take a look at every time interest rates went up 1%, it knocked out another 5 million buyers. So people just can't afford it. And it's interesting because when Brian and I got out of college, everybody had a rental house, it seemed like, right? I mean, as we would go hang out or socially talk with people, they'd be like, yeah, so I'm looking at buying a rental house. And we're like, oh, we own 10 or 15 of them. And other people would be like, oh yeah, I own 1 or 2. Well, now you compare that to today, and behind the need, like Brian referenced, of 3.5 million people that we're short on housing for, but 50% of the kids from age 18 to age 28 are living in their parents' basements. It's like there's just a tsunami of people.
Yeah, I wanted to get the numbers right. So it's really interesting. We think, but you can tell what a numbers focused group we are. But with every 1% increase in mortgage rates, 5 million fewer people can afford homes. So toggle that rate up 1%. And, and the crazy thing is again, simple numbers, you can tell I'm a simple accountant, right? So, our interest rates on our homes, right? 4% interest rates, toggle it up by 1%. That's a 25% increase. Well, that's not what happened. It doubled. Home interest rates are at 7.5%, 8%, 9%. People's home mortgages doubled. So they can't afford homes. The second number that we watch is for every $10,000 increase in home prices, another million can't afford homes. And so you keep toggling that number up. So again, it's just, for us, the challenges that we have are what's creating the opportunity. And so, the sheer fact that the interest rates, the low supply of money is creating a low supply of housing, which is going to create higher demand.
Well, let's talk a little bit about some of the projects you're working on right now. And one in particular, I wanted to ask you about the Prudential campus redevelopment. I was just driving by. It looks like demolition is underway. Things are moving forward. Can you tell me about that and give us a little progress report?
Yeah. So we're partnered up with Scannell on that one, another group in town. If you want to laugh, they're the #1 developer. We're the #2. So we found a partnership there works great. We're focused on the housing in that market. They're focused on the medical office, and then the retail we're gonna do together. And so we are. Of course, I gotta be careful to drop too many names, but Summit Orthopedics is coming in. That building will break ground in July. We're gonna start building housing this fall. We're already out for equity and debt on a lot of those projects. So I guess let me rewind. The building will come down here in the next probably month. Then we'll start mass grading. Mass grading has to happen so in the next 2 months. So they'll see a lot of activity on that site. We couldn't be more excited about it. This is one of those sites. It's 77 acres inside the loop in a very, very prominent, great location. And so we do have retailers with the major names that I don't think I can disclose yet, but dropping their names into LOIs that they're looking to come to the site. So it really is exciting to see what's happening. It's taken a long time to get through the entitlement process, all the utilities planning, because you're building a new community. If you think about dropping, that much housing and that many people and that much activity in 77 acres, you really got to be thoughtful about that, which is what we're doing. And so we're modeling it after other communities. We want this to be a really big boost to the whole community.
Yeah, it's not often that you find a 77-acre site like that, right smack dab in the middle of the metro area, where it's, like you said, a beautiful location. My father-in-law lives in the Trillium Woods community there.
Yeah.
Close by.
Yeah.
And yeah, it's a gorgeous area. So
yeah,
Well,
it's gonna be fun because we're making some of the ponds bigger. We're having a 13-acre park in the middle for the community to have. So it'll be a really, really nice, thoughtful development. It's been great to work with the city of Plymouth on that.
Yeah, 25% of it's going to remain natural.
nice. Well, what else can you tell me about what's happening out there now? I guess let's talk about the award that you're up for. I understand you're finalist for this Entrepreneur of the Year 2024 Heartland Award. Tell me about that.
Yeah, so Ernst & Young puts on an Entrepreneur of the Year award each and every year. We actually tried for it back in 2021. We were nominated back then. So it's our second go around. I believe there's 36 other folks that are from the Midwest here that are up for that award. So it's something that we're quite excited about it. It almost like puts kind of a wrap around the other awards that we've, gotten, Brian, that we've been very blessed with, So we got Developer of the Year award last year. We were in the top 25. I think we were number 25 in the NMHC, National Multi-Housing Awards as, 25th largest developer in the US. This year we raised that up and we were number 12. And even our construction company came into that group. They were number 21, I think, nationally. And then here locally, we were named top 15 as you compare us to the household multi-generational companies that have been here in Minnesota for quite some time. And that includes, based here in the area, but doing construction around the US. So it's Mortensen, it's Ryan Companies, it's, Kraus Anderson, it's, all of them. And we were number 15 on the construction side. So it's fun to see us moving to being quite established and well-known, and getting more outside the Midwest, being more national on the development side, but then also to have coming right behind that or right with us is on the construction side as well.
Yeah, I think one of the things, Brian, we talk about, and like today we have our annual investor conference, and we'll get up there and say to them and say this to you. So I'm not sure if there's a way to capture this, but our success is really predicated on the success of others. So we celebrate awards like this. We celebrate them hugely for a couple of reasons. The first one is because we can only build what our investors invest in. And so our joke is they have to have been successful somewhere to even be able to invest with us. So our success is predicated upon their success, period. The second thing is a lot of the awards are coming from the volume, which is from our investor built buildings, but also our affordable housing. So people don't realize this, but we have 11 buildings right now under construction that are affordable housing. So it's a very complex financing mechanism, takes a ton of capital, but it builds homes for people that wouldn't be able to afford them otherwise. And so they just simply can't afford our market rate homes. And so this is a building, it's a way to get them into them. We started this practice about 6 years ago, and it's taken a long time. We have to be very patient with it, but that's about half our volume. And so our success comes for two reasons: the success of our investors, and then doing the right thing and building affordable homes for people that would not be able to afford them otherwise. And so that's like, literally, we'll get up. Obviously, we'd love to win this award. We're super honored. The other thing is you're up there with companies that are, I can't reference the multi-generational, but we tell our team all the time, we're like, look around, we're not elbowing our way up there. We're not pushing anybody down. We're just thrilled to be a part of that group. Like when you talk about Mortensen, you talk about Ryan and companies that are legacy household names in Minnesota, and suddenly our name is right next to them, whether it's above or below them, we don't care. We're on the list. And that's just, it's a testament to what our team has done. And so we really do. The way we celebrate them, there's not an arrogant bone in it. There's not a putting anybody else down. It's all about our team accomplished it. We went out there, we set the vision, and they made it happen. So that's what we love about the awards.
Well, yeah, when Brian, go ahead.
ahead.
I'm sorry, Brian.
No, I just was saying good luck with that. It sounds like a great honor if you get it. So, or just to even be considered. So,
yeah. Just because we're prepping for the meeting today, we got a Property Manager of the Year award here in 2024. We're in the USA Today for top workplaces. So, Brian and I have to pinch ourselves here as of late, just how much we've been, given in regards to accolades for what we're doing. But it is really just us setting the values and living those, and then just living the mission and the vision, right, of the company. And then everybody's coming up after that. And it's just been fun to see, and folks for us to just give an opportunity to, and they deliver and they do what they say they're going to do. So we've just been blessed and had a lot of fun riding along here on this wild journey.
Wonderful. Well, thanks to both of you for sharing your story and for the market insight, some great insight there. Any other thoughts before I let you go?
No, well, the only other thing I don't think we really touched on, because we didn't go back, but part of the awards and that are kind of, it really is I don't know how to, it's always hard to say this as the co-founder, but it's a compelling, fun story that people like to be a part of. I mean, Kent and I are two average guys, right? Raised out in rural Minnesota. Our parents taught us hard work and ethics, and that's what they did. We had two, we grew up on a farm. We had two small businesses. So we were just raised in that really grassroots. I mean, I don't know what to call it, but the American dream, right? I mean, I feel blessed every day. I still drive my Chevy truck with 130,000 miles on it. I have 4 kids. My best day is when I get to go home and coach them. Go home last night, I was teaching one of them, a new model he's working on. One of them's doing his speech, but we really are just average people that are doing awesome things. And it's because we've been able to combine with our investors, combine with our teams, combine with banks, combine with all these partners out there. And so it's a great story, right? Like, but we don't feel any different. We don't look any different. If you find me on the weekend, I'm going to be pulling my kids behind the boat in the wintertime or driving a snowmobile in the summer. So that's the other part that our investors are really related to, is all the awards, all the numbers, and we can go through them all day long. It's still just average people out there doing what we think is really extraordinary things.
Great. Well, thank you both for your time. I've enjoyed the conversation. Let's stay in touch.
Yeah, thank you so
Yeah,
much,
thanks,
Brian.
Brian. Appreciate
Call
it.
us back if something doesn't make sense or you want clarification, or if there's anything else that we can get to you.
Because we appreciate too. It's not lost on us, Brian. Over the years, you guys have been good to us, whether it's the different award ceremonies or articles like this are definitely helpful for our cause too. So we're trying to do our part to make it a great story and keep pushing forward when everybody else is throwing in the towel. And we appreciate you recognizing that and blasting it out there.
Well, great. Well, it's always fun to visit with you guys, and wish you continued success. And thanks again for your time.
One last thing as we're parting, Brian, it's interesting because a lot of people that we talk to are like, oh, we're done with multifamily, or we're slowing down because of interest rates. And it's like, there's a way to look through that slight cloud and say, hey, that's kind of the front facing, or that's what we can use or say as an excuse. And it's a real reason, right? I mean, it drives up the cost of these projects, but we look at that, and you referenced it. I mean, new housing permits are down some 50%, right? And so we look at that and say, with the numbers that Brian was referencing on how short we are on housing, that's why we keep driving forward. And it's almost like you got to bite the bullet now. Like, man, this really is tough and hard. But we know that, yes, interest rates are 10.5% on an apartment project, right now. But as soon as that gets opened and filled, which it will fill because the housing's needed, then we can do the permanent financing. And we just did a takeout loan, with Freddie or Fannie up in Maple Grove, and it was 5.85%. It was 35-year amortization. Normally you only get 30, right? And it was 7 years of interest only. So the agencies are working with you and doing whatever they can to continue this forward momentum. So as long as a person can say, costs a lot now, yes, but I see a path to getting out, and the product is ultimately needed. So we build now, because other people will crank back up their machines and get back into doing housing, but it might be a year from now or a year and a half from now. And our project will be almost opening up then, and we just won't have as much competition.
Well, and to your point, it's not easy to get, the costs are going up for people who want to purchase their home too. And so if you can make it happen on the rental side, then I'm sure there's demand for that, and keep pushing forward. So
yeah, we keep doing
as
that.
Warren Buffett said, when the building's burning, some are running out, some are running in.
And there you go. All right.
All right.
Thank you, gentlemen.
Thanks, Brian.
Thank you, Brian.
Have a good day. Take
Take care.